My North Star has always been, the consistent pursuit of progression. And that's whether I'm doing triathlon, whether I'm being a dad, whether I'm being a trader, whether I'm being a husband. I always want to keep progressing. And trading is no different. Okay, you're always going to progress. There is no limitation to how good you can become, other than the limitation you set for yourself. So it just depends on what you want.
This episode of the Speculators podcast is sponsored by Jigsaw Trading. Jigsaw Trading is an industry leader when it comes to order flow tools, training, and equipping traders to make better trade decisions. And if you've ever been trading and just feel a little lost and feel like you're missing something, and maybe you've been drawn to order flow and intuitively you know that it's important and that you should be learning this, but it's just a little overwhelming because of how it moves and because of the numbers and you don't really know where to start. I get it, but you need to check out Jigsaw Trading. On a personal level, my first exposure into order flow and the idea that this is important came directly from Peter Davies, the founder of Jigsaw Trading. And even through to today, most of what I do with order flow and my thoughts around it came directly from Jigsaw. We're gonna have more to say about Jigsaw later in the episode, and I'm gonna give you some direction on how you can access free order flow training starting as soon as today. But for now, let's get started with today's episode. I'm very glad that you're here. I hope you get something from today's conversation, and a big thank you to Jigsaw for sponsoring the episode. Let's begin. Mr. Bran again, welcome to the show. Thanks for stopping by.
Thank you very much. Look forward to today.
Oh, me too. Now, at the time of this recording, it's Monday, so the weekend has just happened. How was the weekend for you?
Oh yeah, great. I'm down in the south of Portugal, so we pretty much get the sun all year round. And yeah, it was lovely. It was 25 degrees, nice and relaxing. I've got two little girls, so they're just a bundle of fun on the weekends. But yeah, takes my mind off the markets. Don't have to worry too much about what's going on until Monday. So no, great weekend. Thank you.
Yeah, glad to hear it. And for all the US listeners, that would be 25 degrees Celsius, I'm sure. 25 degrees doesn't sound that pleasant from a Fahrenheit perspective. Now, in Portugal, is this new for you, or how long have you been in Portugal?
So I was one of those COVID movers, was in London from 2011 to 2020 pretty much. And yeah, I was never a big lover of London. It's a cool city, and I think, it's obviously got a lot of pluses to it, but I always had visions of, living by the coastline, living closer to nature, living in a sort of environment where the weather's a little bit warmer. I'm originally South African, so I'm used to warm weather. So yeah, I think it was always on the radar to move to the Mediterranean. And yeah, I think COVID just brought those plans forward. But yeah, I've been here 3 years now, and yeah, absolutely love it. It's a really beautiful part of the world.
Very good to hear. Now, I think your backstory and your journey into trading is something that you've talked about online multiple times. And as we go through this, I think if anybody's interested in diving deeper on you, very easy to find that information. So I'd like to use the time we have very wisely. We can skip over a lot of that. But as a quick foundation so that we all understand where you're at and what you do, could I start with asking you this? What is how would you describe your approach to the markets?
Okay. I think it started, I think we've got to go back to 2011. I started as a pure point and click discretionary trader. Okay. You have a ladder in front of you, which is effectively the depth of the market, as well as a simple price chart. And that was it. We just traded what we thought the market was going to do. And over the years, that's changed. It's evolved. I found what I believe to be the approach and the process that I think works well for me. And it's a combination of things. I think if I was to sort of summarize it in sort of four different elements, I have contextual back tests. Okay, so in a very simple sense, I have structures in the market that are repeatable, that I can define, that I can effectively see time and time again. So we call that context in a market. Within that, then I have automated signals. So I have generated various signals, and all these signals are doing is they're saying, ding dong, there are a lot of buyers in the market. Okay, very, very simple type signals. Price action based signals that effectively are just pointing to sort of mass participation. I'm a little bit more of a flow trader, so I need to know when those flows are there. But all automated. So there's no discretion in my signals. It's very much an automated process. And that just ensures that I remove subjectivity from the equation where I need it to be removed. I then have automated risk systems. So effectively, I don't have any sort of say over, am I using 5 lots or 10 lots or 100 lots? I don't have a say over that. That's all automated for me. And then I have a discretionary execution process. Okay, so that's where I physically go and I've got a signal. I enter the market discretionary and I exit the market discretionary. Obviously, there is a bit of a game plan, that's predetermined, but by and large, that's the discretionary part of my process. So very much a contextual type trader. I see something in the market that is a pattern I understand. I then wait for a signal to tell me now's the time to buy it or sell it. I then simply enter that onto a risk system that spits out a number. And when I'm ready, I hit the button. And that's pretty much the process.
Okay, very interesting. So you are essentially, would you be describing kind of a playbook type of where your context comes from, these repeatable type action that you've seen before in the market? You've put those into ideas that you rely on as your trades. And then when you have the automatic signal, this isn't something that automatically enters you into the market, but it will automatically tell you that you're good to go.
Got you. So yeah, I think to answer the first question, it's a playbook. Okay, it's over the years of capturing trades, I just go into the SRM trading application. I've got all my playbook trades captured, so they're just charts with annotations on. I've got all the stats around them. So yeah, when that trade or that structure presents itself, it's simply just a matter of waiting for that signal. And then once that signal appears, yes, at that point, it's not automatically executing. So I'm not an algorithm. I still discretionary execute. And that's because by and large, I have played around with automating strategies. And it's very, very difficult to do and be very good at because it forces you to be precise. I think you've had a number of people on your podcast that talk about different approaches. I think, if you're going to go wholly automated, recognize that type of play is a very specific play. It requires a lot of precision, a lot of sort of high turnover. You've got to be exact about entry exits. And it's, in my opinion, coming from a discretionary background, it's probably quite difficult for me to do simply because I started as a discretionary trader.
Very interesting. Okay. And then you are manually pushing the button to enter. And then when you hit the button, you said you had automated risk. So is this something that you tailor ahead of time, or it is your risk is always constant for every trade that you're putting on?
Okay, so the risk system, within the application, there are 8 different risk systems you can choose from. Every risk system depends on the style of the trading. But by and large, what the system's designed to do is it's designed to take your data, okay, so all of your trades, and effectively give you an optimal risk. So it's not about, I use $100 per trade. It's not a fixed risk system. It's very much probabilistic in nature. So it's trying to understand, okay, based on this trade, you are likely to win 25% of the time. Okay, that's the first element. So it's looking at probabilities of outcome. It's then looking at expectancy as well, which ties hand in hand with probability of outcomes. And then lastly, it's looking at account balance versus what sort of stop size you're going to use. So it takes all these variables, and with that, it then spits out and says, okay, this is the amount of size you need to use. So it's very much a dynamic risk system. It's not, whilst I want to be very clear to say it's not complicated, it's not as simplistic as just risk $500 per trade. But it is simple. It's very simple in what it's trying to do. And the most important thing is that it's consistent. That's, if anyone's trying to build a risk system, the trick to it, you don't have to be clever. You don't have to be math oriented. You just have to be consistent with it. That's ultimately the key to a successful risk strategy. Just apply it consistently over time, and then let, obviously, probability of outcomes take care of themselves.
Okay, very, very interesting as well. Now, you keep referring, you said the SMR system. Is this, I'm not familiar with what that is.
Okay, so Trello Trading has got an application called the SRM Trading application. It's just a set of 15 trading tools for day traders, effectively. And one of those is the risk manager or the risk manager application. And that's, again, like I said, 8 different risk strategies, a number of different guardrails. It's a tool that's ultimately designed to just get traders, in the right sort of mindset to trade, and sort of putting risk very much as a priority for traders. I think if you look at what a lot of traders struggle with, it's they don't understand basic risk management. And typically what ends up happening is traders blow themselves out of the water well before they even actually learn about trading in the first place. So it's effective. It's a number of different things. I mean, if I was to give you a summary of what it is, we could be for the next hour. But yeah, it's one of the tools is an automatic risk system. It connects onto your platform. So I've got my trading technologies up here. And as the market's moving, the system's updating in real time. It can see your trades effectively. It's updating your risk in real time. It's effectively just a risk system that's attached to your trading. And when the alarms go off, they go off. When you're under risking, it's telling you something. When you're over risking, when you're hitting targets, it's like a virtual risk manager, except it's not a real person. Yeah.
Why have I never heard about this? Who makes this?
It actually started with so Trudelo as a company started 2 years ago, and the ground roots of Trudelo was to go sort of all the way back. It was an application that was built as part of a trading program called the Prop Trading Code, and the feedback we got from the traders was sort of like, holy shit, guys, this is pretty cool. No one talks about risk as traders. No one is looking at risk as traders. This is new. This is something that's interesting. So it started as a risk protocol. It was purely a risk management tool, and now it's sort of morphed into a number of different trading tools as well as trading education. Okay, so what they're very much trying to focus on is, trading education has always been sold as the sort of the panacea or the big solution to everyone's trading problems. And in reality I think it's one pillar. Okay, education is very important for traders. But there's a lot of things that are missing for traders with regards to structure. Okay, and that's what Trudelo is trying to provide. It's trying to give traders that sort of, what should you be doing on a day-to-day basis? Okay, how should you be managing yourself? How should you be thinking about things? How should you be approaching the markets day in, day out? And it's that sort of structure that Trudelo developed. And the feedback from the prop firm in London was, look, this is something traders need. It's something they need, particularly in the first 3-4 years of their careers, to get them to understand ultimately what are the things that will enable you to develop as a trader. So yeah, it's something that's still very much, I don't want to say exclusive. It is available to the retail market, but it's very much amongst the prop traders that are using it at the moment. And no doubt, I suspect in the future, it will probably venture a little bit further.
Yeah. They're doing a good job of keeping it under wraps. I've never heard of it. But I would strongly agree with the idea that one of the biggest issues and the hardest things about trading is we are just forced to make good decisions constantly. And every time we make a bad decision, usually we get punished, or at least we will over time. And there are certain decisions that if we can automate those decision makings to where we don't have to put that into part of what we're, putting our mental energy into. Yeah, sounds extremely, important.
I'd go a step further you're spot on there, which is, if you think about risk, okay, one of the hardest things traders face every single morning, if you do 10 trades a day, you shouldn't have to think about how much size to put on. That should be something that's automated, because it can be automated. But second to that is, one of the hardest things I remember early in my career is I remember at the end of every year, I would go and tabulate what I called controlled losses. Okay, and controlled losses was nothing other than those losses that I could have avoided had I stuck to my rules or been disciplined. Things like moving stops, things like, instead of using a 10 lot, using a 50 lot, that sort of stupid stuff. And so what I would do at the end of every year is I would go and I would sum all those losses effectively. And what I recognized was I was giving away like an annual salary just in controlled losses. So what the Trudelo application is doing is it's actually, traditional trading tools like journals and all that are very good. Okay, they're very, very important. However, unfortunately, they're a little bit behind the times in that a journal's just telling me what I've already done wrong. That doesn't help me. What I need you to do is tell me when I'm doing something wrong at that moment. Okay, and that's where the application comes in handy, because if I'm over risking, I'm not going to wait for my journal to tell me I'm over risking. I'm going to get a guardrail that's going to say, you are over risking. Okay, if I move a stop, I'm not going to wait for my end of day debrief to go, I moved my stop, therefore I had a bad day. No, you're going to get a warning from the system. If you start gambling, if you start tilting, that's going to happen in real time. You're going to get that messaging straight away. Okay, now what that means is that what would typically happen for a trader is we would lose, I don't know, let's call it $1,000. Okay, because we broke a few rules, we got it wrong, we were in a sort of a bad mindset, whatever it might be. We broke a few rules. Okay, we've lost $1,000. The reality is now is there's no way of me getting that $1,000 without going back and trading again. Okay. Whereas if I have a system in place, the system is, it's not that it's not that you haven't lost money, but you've lost a fraction of that. So maybe you've only lost $250. Okay. Now, if you think, what are the spin-on effects of that? Is that I come in tomorrow, I haven't lost confidence. I'm not emotional. I'm not fearful to come in and trade. Moreover, when I come into tomorrow, all I'm doing is I'm switching on a system. And again, the system just says, buy me 5, buy me 10. It's not emotional. It's not fearful. It's just a number. It's an algorithm that's spitting out numbers based on math. And so what we found looking at a lot of the traders is that emotional fear of losing disappears. Okay, because you're not thinking about it anymore. You're not thinking in terms of, oh, I'm going to lose $1,000. You're thinking in terms of, the system says 5, I buy 5. The system says 6, I buy 6. The system says you're doing too many trades, I do less trades. So you stop focusing on P&L per se, and you very, very much focus on process. And again, if you look at a lot of the most successful traders, that's what they're focused on. They're not too concerned about losing. It's very much a case of they focused on what are the things they're coming to do tomorrow, what do they need to repeat, what do they need to be aware of, and there's just execution. So yeah, I think that's to add to what you said. I think that's another one of the benefits.
Great. I'll tell you, this was supposed to be a quick little segment where we just learn about your process. And I'm glad we derailed because it was very interesting, but I'm going to try to pick up a little bit of time here. Let me ask you this. What products are you trading?
Okay. Purely futures. So purely futures, I will trade equities that move around. So if the particular tech stocks, if they become quite volatile, I will trade in them. But no, my 90%, 95% of all my money is going to be made trading liquid futures. Pretty much trading 12, 13 markets. When someone says to me, hey, wheat is breaking out because Russia-Ukraine war, I look at them, I'm like, cool. That's cool. Yeah, sure, there's implications for inflation. Cool, I'll read about that in the newspaper. So, I think I've done this long enough to know that you've got to play in the lane that makes sense to you, and you've got to stay in that lane as well. What happens typically when you start to move out of the lane, and I said this to one of the younger traders the other day, was I said to him, the reality is, sure, we can look at nat gas, we can look at wheat, we can look at all sorts of other things, but the reality is, if you go and fast forward to the end of the year and look at your income, look at your P&L from all the markets you traded, okay, maybe 1% is going to come from that wheat, but tell me, how much input did you give into it? How much focus and time and energy did you actually give to make that 1%? Moreover, how much opportunity cost did you leave on the table in your market? So there is something to be said for, I think you need to trade more than one market, but I think equally you need to realize that your one person was one level of capacity to absorb and understand things. So there is a limit to how much you want to take on. And I think second to that, I think what sort of matches nicely to that is I think traders typically nowadays, if you look at a lot of their charts, my goodness, they're looking at a lot of things. Okay, there's profiles, there's footprints, there's moving averages, there's all sorts of things going on these charts. And the reality is, the more things you have on the chart, the more things you're forced to think about, the more conflicting signals you're going to end up having. So yeah, you've really got to simplify it and dumb it down. I think that's one of the messages loud and clear: dumb it down. You don't need to overcomplicate trading. Yeah.
Yeah. Okay. So did you said the maybe 12 to 13, that's just like the most liquid futures, what you keep your eye on? Was this something that you, I'd be interested in your perspective on this. Did you grow into keeping your eye on that many products? You said you need to trade more than one, and I would be interested what you think about this dynamic. Is it better for newer traders to have fewer products that they watch and try to master how those products move very intricately, maybe even one product at the beginning? Or is it better to try and master a few of these setups and then spread those setups over, more products?
Yeah, I think so how we started, we had one product. I was a German Bund trader, and we weren't allowed anything more than one product. And the reason they did that was they wanted us to learn fundamentals and foundations. By fundamentals, I don't mean macroeconomics. What I mean is they wanted us to learn the fundamentals of trading, things like liquidity, volatility, all these sorts of things. So the focus for us on day one was learn the baseline understanding of trading. And to do that, you've got to ignore that there's so many markets and things are moving and just focusing on one thing. And then over time, it was a case of volatility is volatility. It looks slightly different in different markets, but it looks the same on a chart effectively. So what we would then do is slowly just add one market at a time And when you've got an edge in that market, fine. If you want to distract yourself a little bit more, then add another one. So that's how we did it. Now, what I would say is if you've got a structured play, okay, a setup you like, something that makes a lot of sense, you understand the pattern, you understand the execution, by all means, I think it's perfectly fine to branch that out into other markets. If you can find that edge, by all means, adopt it, implement it. But again, I think just coming back to what I was saying, I think you must recognize that there is a limitation. There is a point where it's no longer worth you branching out any further because you do run that risk of just diluting the original strategies. Okay, I know. And again, I suppose it's not that there's a wrong and a right. I think everyone's got to do it their way. I know some very successful traders that only trade, oil and gold, and they do something very simple in it and they make millions every year. And then I know some traders that trade across 20, 30 markets, they also make millions a year. So it is very much about doing it in a way that makes sense to you, but recognizing I think there is a limitation either way to how much you can focus on.
It's very interesting, even as you're just talking, a couple, I think, very difficult dynamics to get right in trading. One thing you said, keep it simple. And there's a simple version of trading that is just too simplistic. It's not sophisticated enough. You're just buying because this average crossed this average. It's simple, but it's not sophisticated enough. And then there's these levels of complication where it's just not helping us make trade decisions anymore. And to find that balance of this is simple, but it is powerful and it is sophisticated enough, I think is very interesting. And then you just said, you have to do it your way. And there is not, this is the tough dynamic. There are a lot of things that you can do fine in trading. So not to say there's only one right way, but there are so many bad ways. And you can fall into this trap of thinking, well, this is just what I need to be doing. And maybe what you think of that is just completely, it's not actually going to work at all. And so doing it your way and having the ability to make that decision, but also making sure that, your way is something that will work in the end. These are interesting balances that I was just thinking as you said it.
I think one of your previous guests mentioned the word iteration. Trading is nothing but iteration. It's about starting with something, an idea, putting it through the market and just iterating through that same idea over and over and over and over again. And eventually you'll land on something that kind of works. And then over time, you're going to try and optimize it. You're going to try and minimize when it goes wrong, because the reality is, and I don't think many traders accept this, most trades are pretty rubbish. Okay? If you were to do a statistical backtest, I know a lot of people throw statistics out there. If you were to do a statistical backtest on some typical day trading strategies, the numbers are awful. Okay, sure, they've got positive expectancy, but they're not something you would look at and go, oh, I've got a 65% likelihood to win on this. They're just not that good. But where we're capable of making money as traders is that we are capable of understanding nuance quite well. And that's, for example, when I'm trading a breakout trade, I've got a set of characteristics that I'll call textbook characteristics. Okay, these are the things that I want to see objectively, not my opinion, not my feelings. I want to see high volume. I want to see one time framing. I want to see a real lack of two-way trade. I don't want to see that in the market. I don't want to see, big sellers hitting, the buyers when I'm playing to the upside. I just don't want to see that sort of thing. Now, that's textbook characteristics. Now, I'm capable as a human, having seen that pattern over and over and over again, and having logged hundreds of that trade in my playbook, I know that if I was to see, for example, a really big reload offer coming in, selling the market when it's just broken out, I know fine well that the probability or the likelihood of that leading to a poor breakout is very high, and I can scale that out. Okay, so where a machine or a pure algorithm will effectively just get stopped out in the trade, I'm already scaling out, perhaps for a small winner, perhaps for a small loser, but I'm not getting stopped out on the trade. I'm not losing money, okay? But I am also gaining another observational fact. And that's where day traders still have a very big edge. We can understand and interpret nuance. Now, sure, we have to be careful with nuance because nuance is almost pure subjectivity. And sometimes it can lead you to make, sort of suboptimal decisions. But no, ultimately, I think that's where us as traders do still have a little bit of edge on particularly computer programs.
The one thing we got on the machine still, we got to really lean into that for sure. So when you are, let's say, into a trade, what would an average hold time look like for you?
It depends. Okay, so currently I've been short DAX since Thursday. Okay, we've got a very nice consolidation breakout, so it's quite a big time frame breakout, and I will sit on this for as long as I need to sit on it. And like I said, it's not I'm not looking for a specific target. I'm not looking to trade it down to X. I'm not looking for a 4x1 risk reward. None of that. I'm looking for something very specific in terms of price action. It says, okay, the trade's done. I'm now going to exit the trade. But that's not typical. Like, I don't want to make that sound as though that's my typical time frame. I'm very much, I wouldn't say I'm a scalper. I'd say I'm a swing day trader. So I come in the morning, I've got a trade grid that effectively says, look, these are where there's sort of some contextual understanding. These are your playbook trades that are available. And yeah, sometimes they're going to be as quick as a stop run. Okay. And that could be anything from, I don't know, 30, 40 seconds. And it could be anything for as long as a couple of days. So it's not that I have a specific average duration. What I've got is I've got every play has a typical duration. Okay. So, what you'll kind of find is a stop run is more or less going to be quick in and out, versus, if you're playing a breakout on a daily time frame, that's going to be more or less a couple of days, regardless of the market.
Mm-hmm. When somebody's trying to, let's even say, learn how to trade, I think that most of the common wisdom out here is not good in terms of thinking about things like I'm going to get one-to-one risk reward, or I'm always going to use this much size, or I'm always using this much of a stop. And these very binary decision makings, we can just do so much better as traders. But this requires trading skill. Do you think that right from the rip, there's benefit in treating things not ideally in terms of focusing on 1 to 2 risk to reward and then just cutting off? Or do you think right off the rip, people should just be focusing on those skill sets and making those decisions that they need?
I think it's a mixture of both. And I know that's probably not going to do the viewers much of a positive one, but I think when it comes to managing risk, be precise. Okay? I think risk needs to be precise, simply because in the beginning of your career, you have to think of it. You've got an amount of rope. Okay. And think of your rope as your amount of time, effectively. And every day you spend in the market, you're using up a little bit of that rope. Okay. Now, the reality is that none of us have infinite capital, and you have to safeguard that capital, which means if I'm in the first 2, 3, 4 years of my career, I need to learn as much as quick as I can, as cheap as possible. That's kind of your objective in the beginning. And then hope, obviously, you come out on the other side having enough skill to be able to break even and make some money out of this. So yeah, I'm a firm believer in terms of the risk side of things. To answer your question, I think you want to be precise. I think you want to be exact. You don't want to, you want to keep it simple, obviously, but I don't think you want to go, oh, I'm going to be long and then I'll kind of just, maybe I'll get out here, or maybe if it closes below you. I think that invites too much discretion and just problems as a result. Whereas on the upside, I think you've got to steer very clear or very far away from, I'm going for a 2-to-1, 3-to-1, 4-to-1. I think that's something that's very misleading. It's very much driven by marketing. If I was to tell you, hey, sign up for my course and I'll teach you how to make 3-to-1 risk reward. Okay, it's a very, very easy marketing term. The reality is, ask any day trader to see their playbook and you'll probably find their risk reward is probably short of 1-to-1. Okay, if you go and look at all their trades over time, it's probably definitely less than 1-to-1, which will come as a surprise to most people. Okay. Don't forget, if you were just to draw a distribution curve of any strategy, so take a very simple strategy and go draw a distribution curve of the excursion. In other words, the positive excursion and how favorable that trade can look from a target perspective. What you'll find is that it's very far into the right. In other words, the really big winners from a distribution perspective happen 1%, 2% of the time, whereas the 1-to-1s happen frequently, 40, 50, 60% of the time. So just looking at pure basic statistics, you've got to be realistic. You've got to say to yourself, if the market's offering me 1-to-1, 40, 50, 60% of the time, that's probably what you've got to be looking at in terms of target. Okay. You've got to leave the 3-to-1s, 4-to-1s, 5-to-1s for, I think you just got to leave those alone. Not because they're not possible, but because I like to think of those as the ego trades. They're the ones that when you do get it right, cool. All right. You're not going to be doing it on any size. You're not going to be doing any leverage. It's that one that you run the one lot for and you feel like a hero and you tell your wife about it because you're so proud you sat in the market for a week. But the reality is that's not where traders make their money. Okay. Traders make their money on well-positioned, well-timed trades where they've got not oversized leverage, but they've got a good enough amount of leverage that they can make some decent money. Okay. Again, if you look at a trader's P&L and you go and plot their P&L dailies over the course of the year, you'll see 10, 15 really big up days, and the rest are all very average. Okay. And this is the same for million year traders. They don't make that million by making 20, 30, 40K every single day. No, it comes very much with a couple of outlier days, and the rest are sort of just average days. Okay. So again, I think that probably does, for new traders particularly, get that idea out of your head, that 3-to-1, 4-to-1, 5-to-1. I think the reality of the situation is you're not going to get those winners as much as you think.
Incredibly powerful topic right there to go on. And the what we're diving into here is the reality of what the market looks like. When you get out of this, on paper or in theory, but when you actually get into the raw market, the reality is those trades where you enter and they go straight to a 5-to-1 target, those are the outliers. And what it actually looks like, the process of entering a trades that fail immediately, or entering trades that go partially to your target and then something changes, or making up for all of those variations, where are the meat of your trades going to come from realistically? And it is not, I'm going to enter here, exit here for a loss, or exit at this 5-to-1 target. That's just not what it looks like in real life.
Exactly.
And so how we could talk about that for a long time. I'm really glad you brought it up, but I'm glad we at least touched on it.
Look, I think I'm probably one to blame on this as well, in a sense that, if I post a chart on Twitter, okay, sure, I'm gonna embellish it and I'm gonna make it sound wonderful. And oh, look, you just got to sell it, yeah, and it's gonna go all the way to there. And contextually, that's what I believe will happen. But I'm not sitting in that trade for 2, 3, 4 weeks to take. No, that's not my job. I'm a day trader. I'm a day swing trader. If the market offers me 1% move today in the S&P 500, I can promise you I'm going to take that 1% move, and I'll come in tomorrow. And yeah, if it tries to bounce and it gives me a nice easy entry, okay, I'll try it again. But no, day traders that's what we do. We day trade. Okay. And sure, we will sound convicted, and we'll sound like, we are just in the position running it for week after week after week, but we're not. That's not our game. We don't have the balance sheet to do that. And we don't have, in all honesty, we probably don't have the psychological nerve to do that. Okay. If you sit in a trade, and I've tried it a few times, watching that thing rip up and down, coming back to you and with leverage is horrible, man. It's painful after a week of it. You just want to give up and go and, put your head on a pillow. So yeah, I think, again, I think it's good to be real with traders and just tell them what the reality is. Okay, sure. If I post a tweet with a fancy thing saying it's going, yeah, that's not what traders are doing in reality. Okay, sure. There are obviously big funds and hedge funds and all that, that's their game. That's what they do. They have to invest billions into the market, and they can't do that just getting in and out of the market on a daily basis. They have to do it over a period of time. Whereas us as day traders, okay, our little bits of liquidity is not going to move the market.
You just said the idea of dealing with certain situations in the market and then wanting to just go put your head on the pillow. And I think trading has a very specific way of just taking your energy from you, your mental energy, your mental capacity. What are your thoughts, and what do you do to protect that? Or how do you think about your mental energy when you're trading?
Let's take a quick break from today's episode because I need to ask you a very important question. Have you ever been trading, maybe up against the hard right edge of the screen, and you find yourself maybe coming off of a loss and thinking thoughts like, what is going on? I'm confused. I don't get it. You ever think those kind of thoughts? Of course you have, because you're not using today's video sponsor, Jigsaw Trading. Jigsaw Trading provides institutional grade tools, education, and insights to help traders make better decisions. And it's no secret that the best traders in the world are using order flow, sometimes exclusively, but they're using it at some level. And if you don't understand order flow, and if you don't have the tools to see it, you're just missing an important piece of information. Full stop. Jigsaw Trading is the real deal when it comes to equipping traders with the tools and education to trade like pros. And I'm talking about their award-winning trading platform called DayTrader. This is going to give you elite level order flow analysis, custom charts, automated trading analytics, and it was built based on techniques actually used by institutional traders to give you clarity into market movement. And that's just one part of the package. They also have Journalytics, the most advanced journaling and analytics system that is going to track your progress and help you identify your weaknesses. They also go beyond tools and resources with step-by-step video courses and drills designed by real professionals to shortcut your learning curve dramatically. So, whether you're a seasoned pro or brand new to the screens, Jigsaw Trading is going to have something for you. Oh, and did I forget to mention that they're giving away a free order flow training right now? All you're gonna have to do is click the link below, and it's gonna take you to a free order flow training where you can see what Jigsaw is all about for yourself. A big thank you to Jigsaw for sponsoring this episode. Make sure you check out their free video training. Now let's get back to the episode.
I love this question because often what you see a lot of educators talking about is they lacked discipline, and there's this real idea that you either have discipline or you don't. That's rubbish. I think we all have what I call a self-discipline tank, effectively, and you have to think of it just like a fuel tank. After a restful vacation, you come in, you're hungry, you're excited, your energy levels are high, you're mentally focused, and you're ready. Okay, now the reality is, as you're adding different stresses to the environment, whether that's trading, whether that's your family time and kids, whether that's an argument with your wife, whether that's maybe a stressful down day, all of these things start to pull from that tank, and you start to drain that tank. And the reality is, you're not ill-disciplined. What you are is, you're a human being. You've got a degree of self-discipline. And once your tank hits zero, guess what? You and everyone else who hits zero in the tank is going to make a mistake. You are going to, have this sort of ill-disciplined moment, and you're going to do something stupid. Okay, now, to come back to your question, I think the first thing to say is that it's okay to be ill-disciplined. There's nothing wrong with it. Okay, I'm ill-disciplined all the time, which is why I've got two coaches. Okay, I've got a triathlon coach and I've got a swimming coach, and their jobs are very specific. Keep me disciplined, keep me accountable, keep me doing what I tell you is best for me to do. Because when I start to lose focus, when I start to run out of energy, that's when I'm going to draw upon you the most. That's when I need you just help me over that edge. Just keep me going for long enough. Don't make any mistakes, and get going again. So I think coming to the question with regards to how do I do it? Well, I am a triathlete, so I do Ironman triathlon. And that not only keeps me disciplined, it keeps me learning. Okay, so triathlon is very similar to trading. It's not something you just do on day one and you're a triathlete. It's something you do over years. You build endurance, you build an understanding of your sport. You deal with demons. Okay, I've got an Ironman race coming up now in 4 weeks, and I'm going to have to deal with some demons on the run, and that's because I've undertrained. I'm not quite ready for it yet, but I'm prepared for that. It's kind of like trading. Sometimes you have to play the cards, and I'm going to have to rock up on race day, and it's going to be a marathon run in front of me, it's going to be hard to deal with. But in one sense, I'm excited about that. But yeah, triathlon works for me. It helps me deal with things. It helps me particularly stay out of trouble. It helps me sort of compartmentalize my thoughts. But yeah, I think I know there's a couple of triathletes in the trading world, and it's a fantastic sport if you are looking for something that really complements trading in many ways.
Yeah. In my own personal just kind of evolution, this has been something that has been very focal for me over the last couple, maybe even over the last year and a half, of just getting to this place of realizing that the market is just I'm letting the market take way too much of my energy, and it's just not worth it to be at the end of the day and be frustrated, or to just have no energy to do other things. And I like the way you said it about this tank, and it's a very helpful way to look at it. I look at it a similar way of just, I only get so much of this. And Ray Dalio says, don't confuse things for the way they are, for the way that you wish they were. And the reality is that when this is gone, I'm done. And it's so important to protect that. And I don't think there's a one thing you need to do, but figuring that out, making that a part of your mental something, and working at it is so important.
I think one of your previous guests spoke about working 15 hours a day, and I think it was Jason Shapiro. And full respect, I mean, he's had an incredible career. And the reality is that 15 hours a day, you're going to burn out, and you're going to run that tank down a lot quicker than most. But I think where Jason, and I kind of would have loved to have asked him that question during the interview, is, what works for me is that when I hit zero, I'm aware of it. Okay, so I'm very aware that I'm sluggish. I'm not quite there. Now I've got a number of systems that'll protect me. In other words, if I'm going to make bad decisions, it's fine. My application is going to manage risk in such a way that the worst case scenario is I'm going to hit a stop out there. I'm not going to blow a hole in my account or anything like that. But I think I've been doing this long enough to know that when I reach that point, not only am I not going to trade, I'm going to be away for a day or two or three, because I'm so self-aware that if I do come, it doesn't matter. Even if I'm got the best ideas on, even if I you have the best intentions and all the help in the world. The reality is I'm going to make a mistake. And trading, unfortunately, is one of the few jobs that it takes so much more when you make small mistakes. It really takes a lot from you. So what I found is if I'm running low, I just don't trade. I need the day or two to kind of come back, get that little bit of hunger. So yeah, I think everyone's got to find what they're doing. Question I would love to have asked Jason is I would have liked to say to him, you know, when you do hit that zero, because the reality is you can't work 15 hours a day every day. What is it that how do you back off? How do you know that you're at that point? And I mean, someone with his career, no doubt that would have been a really cool question to have him answer. So yeah.
You're making me feel like a bad interviewer here with good questions that weren't asked. You actually said two things that I'd be really interested to get clarity on here. You said that when you're not feeling 100%, okay, that you'll avoid the market. And this is a really interesting dynamic that new traders, retail traders, everybody has to get right. There are some days, life happens, you're tired. Sometimes you're dealing with a breakup. Sometimes you're dealing with whatever. And you're not 100% dialed in flow state. And what is that dynamic that you stick to of, okay, I'm a little tired today, but I'm not going to take the whole day off. Or I am a little tired today, so I'm going to be extra careful, or I'm hungover, I'm just not going to touch the screens. What is maybe some of that, more the nuance there of how you make that decision?
Gotcha. I think the first thing to say is that I think rules are very important for traders. You know, I come from an era where you were at your desk at 6 o'clock every morning, okay, and you work till 6 o'clock at night. And, you know, if you didn't do that, you weren't committed, you weren't dedicated. That's rubbish, okay? I think in the beginning of your career, you need to have a very structured routine and approach to your trading. But as you do this for long enough, you need to define your own rules. You know, you need to know and define what works for you. Some people can focus for 10 hours a day and they can execute and be optimal 10 hours a day. Some people can't do more than 4 hours. So don't be afraid to do what you know is right for you. I think that's a really key message that, you know, I've come to learn over my career. I don't do what's right for everyone else. Okay, I do what's right for me at the end of the day. Now, coming to that, this whole sort of understanding my own rules started with when I was a very young trader. I used to prep on Sundays. And as a result, I used to be very anxious. I used to be very excited to trade on a Monday. It was anxiety. And so I really struggled to sleep on Sundays. And what I would typically do is I'd come in on a Monday, start of the week, and I'd be very sort of aggressive in the markets, wanting to be active. And Mondays was literally the worst day of the week for me, week after week after week. And I just spent the rest of the week getting my losses back. So I very quickly came to understand, look, if you don't trade well on a Monday because you're excited, the simple thing is come into the office, but don't trade in the Monday morning session. Okay, let the market show you its hand, get a little bit more understanding. That gives you time to kind of adapt and, you know, wake up a little bit more, warm up to the risk of the week, and then start executing. That worked well for me. Okay, I've never ever stopped adopting that. If I have a bad Sunday night sleep, it's the same thing. Okay, that's the same approach I'll adopt. I just won't trade the morning session, and I'll trade the US session specifically. So that's the one thing. If I travel, this is another thing I had to learn the hard way. I'll never run positions whilst I'm traveling. Okay, and I know some people travel very well. Okay, I know a brilliant French guy who he traded off a laptop for 6 months traveling the US in a camper van and did fantastically well. Okay, the reality is everyone's got to do it their way. I don't feel comfortable traveling with positions on simply because then I've got my phone on and I'm suddenly buying and selling, and the next thing I'm just doing all sorts of stupid stuff and I'm not actually enjoying whatever it is I'm supposed to be doing. So yeah, I don't look at markets when I'm on holiday. I don't care about markets. It is what it is. I'll come back and then I'll have my templates and my processes and it starts all over again. So yeah, I think everyone's got to define their rules for themselves. I think that's the real key thing. I define them as I understand them. Okay, now, you know, some really good traders that trade fundamentals will, for example, stay awake to trade the Bank of Japan in the early hours, 2, 3, 4 a.m. in the morning. Okay, it's not to say that that's wrong. For me, that's completely wrong, because then a day I got to get up at 5:30 and I got to get training, and then I got to get the girls to school, and then I got to get to work. And that works for me. It enables me to be optimal, to make good decisions. And that's how I know that that's the right rule for me. So yeah, I think you got to define your rules for yourself.
Yeah, really great to hear your thoughts on that. Could you walk us through kind of a normal average trading day for yourself, from the time you wake up to anything that you would do as a pre-market, or not even pre-market, but let's say like any kind of rituals you do in the morning before you start work, then what your pre-market looks like, your prep, what you do through the trading day, and then if you have any kind of end of day ritual.
So would you like the one I want to adopt or the one?
Oh, okay. Yeah, maybe
Yeah.
where you're currently at right now.
Yeah,
If
no,
there's some
I'm
variation
I'm not
on it.
afraid to say it. Look, I have to be very routine because I'm trying to force into a limited amount of time a lot of things. Okay, so when I'm training, I'm not training for half an hour. This morning I had an hour and 5 minute fartlek run. Okay, that means I'm prepping for that. I got to eat for that. I got to get dressed. I got to run. I got to come back. I got
A
to
1
shower.
hour
All that
what
kind of
run?
a fartlek run. So it's basically a fartlek run is rather than just running 1 hour at a constant pace, you're kind of moving through gears. So you're kind of, yeah, you're just moving through different speed gears effectively. It's just a type of smart training when it comes to running. Anyways, so yeah, my morning would wake up typically 5:30. I would then spend a half an hour just gathering where my thoughts are. I'm a big believer in meditation. Not meditation as in like but I really like to understand my thoughts. So I typically write out, I had a heated discussion with my wife last night. Why did it get heated? Why did it go that way? Maybe she was right with this. So I'm very much someone that wants to understand or at least have a second thought about my thoughts. So I write a lot of things out. Again, like I said, I would like my meditative practice to also adopt other things. Like, I do fast forward meditation as well occasionally. But again, the reality is that there is a very limited amount of time in my day. So at the very least, I will gather my thoughts, write down my thoughts in the morning. Then it's on to an hour training session. And then it's breakfast and spending some time with the girls. They entertain me in the morning. And then, I like to be at my desk 9 o'clock in the morning, going through my my structured prep sheet effectively, which is an automated sheet that's just defining structures for me. It's not something I have to go write out. It's something that comes directly from my charts. And then, yes, at that point, I typically don't like to be involved within the first half an hour simply because I'm a firm believer you got to warm up to risk. It's something that you have to kind of, if you just sit down and put a trade on, the reality is you're not ready for risk. You're not ready to sort of take on that stressor so quickly. But yeah, because I've got a lot of automated stuff, I don't need typically what I used to need. I used to need about 45 minutes to get going. Now it's kind of 15 minutes and I've got an understanding of where I'm going to apply myself. Then yes, I'm a firm believer in taking lunch hour, take an hour for lunch. I don't always, unfortunately. I know it's very good for you. I'm a firm believer that when the clock strikes, 5, now's the time to debrief and really kind of, spend your time thinking about things. Very often my debriefs might be cut short because I'm still busy trading or I'm still stuck and involved in something. So yeah, and I think the reason I mentioned the sort of the what I would hypothetically love it to be and what it is because the reality is that, I'm just a human. I obviously make mistakes as well. And, there's a perfect routine that I know when I adopt it, when I can maintain it and be consistent with it, I start to see the results of it. Every now and again, when my performance starts to drop, it's a no-brainer as to what it is. Okay. It'll either be a debrief or it'll be the routine's breaking somewhere, or it'll be that I'm not training in the mornings. Okay. It could be any one of those number of things, but I know for a fact that I can identify it very quickly. Okay. Because I typically follow the same routine day in, day out. So yeah, I think that's what a typical day would look like. And then I'm back home with the girls, and then it's dinner time, and then watch some silly television or play some silly board games. I think that's quite fun.
Now, when you do your end of day ritual, you say the debrief. What would be like the minimum time that you need to do that before you just skip it, or what would be like a long amount of time that you would spend doing that?
I would never skip it. I think that's even if it's just 15 minutes. There's an expression that my coach often teaches me. He says, when you're not feeling up for it, just start pedaling for 5 minutes. Just promise you'll do 5 minutes. And the reality is 5 minutes will turn into 20 minutes. And the next thing you finish the set. So it's the same thing with a debrief. Just promise yourself 5 minutes. Even if you just get a blank piece of paper and write, I hate trading. Why did I try? It's something. It'll unlock some sort of thought. It will really give you the opportunity just to maybe reset, restart, kind of say what you need to say on a piece of paper. But then, so my journaling is all automated now. So it's all programmatic. It's ones and zeros. It's select from a drop down. It's capture this chart, annotate this chart. So it's And I've done that for the very specific reason you mentioned. What's the most amount of time you would do? So I used to very much run the mistake of doing a debrief for an hour and 20 minutes, hour and 30 minutes. And the reality is not sustainable. It doesn't matter who you are. You're not going to sustain that for a long period of time. So what I found is that automate as many of the things that you can automate, so that that process can be sped up and you can spend your time thinking about the most important things. Okay, there's a couple of key primer questions that I really, really want to nail into and understand that, aside from everything else, those are the most important things I need to think about, and if I can spend 15 minutes doing that, that's more than sufficient.
Yeah, I think the idea of creating structure and optimizing is a level of human evolution that we're all in the process of, and that needs to be at the forefront, to where almost this less evolved idea that if you have structure and that if things are well organized and optimized, that's no fun and that takes the joy out of life. And was almost in the zeitgeist for a very long time. And the reality is that when you have these structures, you get to do everything in life that you want. And without them, you're behind on everything. You can't pay your bill. Like everything starts going off the rails.
Yeah.
And, there's an interesting, I was doing let's say a meditative type thing myself the other day. And this thought came into my mind for some reason of this story in the Bible of when Adam and Eve sinned and God came down to visit them for the first time in the garden. And he asked them the question, he said, "Who told you that you were naked?" And the idea hit me of just so many of these things we have been conned into. And who told us these things? Who told us that structure makes your life boring and you shouldn't have it? Who told us that? And I just went through this, long series of things. But I'm glad you talked in hearing your, some of the structure. I know you just high leveled it, but it was very nice.
Can I add a quote to the whole structure? There's a quote that process saves us from the poverty of our intentions. And if you go and really deeply think about what the quote's saying, it's that sure, process can be hard work and it can be tiring, it can be boring. I get that. Trust me, I'm the first one to say it is boring. But the reality is, what's the alternative? Okay, if you don't have that process, what's the alternative? You have complications, you have volatility, you have sporadic decision making. So when you look at it, ultimately the process does save us from our true intentions, which is we would just do nothing and we wouldn't perform, and we would ultimately just become slobs. So yeah, I really like that quote, because it kind of takes the other side of, if you don't have process, you are going to just be suboptimal, really.
Let me ask you this. You have, let's say, a blank screen that you can put on, a blank chart that you can put on one product to watch. You can put on one time frame, and you can only put on one tool. How would you set that chart up?
Candlestick, 15 minutes, E-mini S&P 500.
Candlesticks would be your tool?
Yeah.
Oh,
go on, you can ask me why.
yeah, no, but I would have granted that to you as a given, that it would have been on there already. But you would rather just watch the straight price action than anything.
So I come from, I absolutely love market profiling. I absolutely love delta. But when you use those, look, market profiling, delta, and candlesticks are all just a representation of data. That's all it is. It's a pretty picture of the data. Okay, now when you work with profiles for long enough, I can tell you what single prints look like on the candlestick chart. Okay, I can tell you what, where high volume areas are and low volume areas. I can tell you where the absorption is taking place. I can see it all on a candlestick chart now. Moreover, when I create my signals, they're all done off of a candlestick chart. So I can signal, for example, delta reversal. So where most people will have a footprint chart to see delta accumulation or delta reversal or delta absorption or elephants, I can signal that straight onto the candlesticks. Okay, so again, it's not a right or wrong way. It's just I've become so used to trading directly off the candlesticks because I kind of automate all my signals off of them. But yeah, S&P 500, because it's the most liquid, it's fun, it moves nicely, it presents lots of opportunities. And 15-minute, because what I found is obviously a lot of my signals are generating, like I said, mass participation. So I need to know where there's a sufficient amount of participants playing in my direction, because obviously if I'm short, I want them on my side. And what I found is that 15 minutes is noisy enough that I'm getting signals, but it's also long enough that it is signaling actually mass participation. Okay, if you go too short, what I found is if you go 1 minute, you're gonna run foul of many algorithms and lots of noisy kind of price action. Whereas if you go too long, you're behind the move. Okay, so think of a Goldman Sachs. They, if they enter the market and I'm looking at an hour chart or 2 hour chart, the reality is I've probably already missed the move. They've already executed the order. So that's kind of how I've landed on 15-minute charts. And again, it's not about 15-minute being right. It's not about 5-minute being right. It's about what are you trying to do as a trader? What's your approach? What's your contextual understanding? How do you feel you can apply yourself to the market? And then take the charts and set them up that way. Okay, I see too many traders that put charts, one of the funny things, go to any prop shop, any prop firm, and they all have 8 screens. Okay, and you'll look at the 8 screens and 4 or 5 of the 8 screens will be charts. And I'll look at them and go, why have you got so many charts? Like, you can only look at one market at a time. Why do you have so many charts? And there'll be the usual reasons. Because I need to keep track of this and I need to keep track of this. And when you kind of pull them away, you say to them, well, let's look at how much energy and thought you're giving to another market and how much confusion that's creating. And by the end of the conversation, they'll go, you know what, actually, I don't think I need that many charts. So yeah, I think that just comes back to that same sort of idea we were talking about earlier about keeping it simple. Okay, the more simple you keep this, definitely the easier it becomes. And I mean easier in terms of understanding, in terms of developing, steepening the learning curve. I don't think trading ever becomes easy. I think that's it's a wonderful game in a sense that it doesn't matter how long you've been doing this job for, you are going to be learning for the rest of your career. My North Star has always been, the consistent pursuit of progression. And that's whether I'm doing triathlon, whether I'm being a dad, whether I'm being a trader, whether I'm being a husband. I always want to keep progressing. And trading is no different. Okay, you're always going to progress. There is no limitation to how good you can become, other than the limitation you set for yourself. So it just depends on what you want. And not everyone wants that. Not everyone, some people go, oh, you're a bit obsessive, you're a bit crazy. Why do you want to go for a run at 5 a.m? That's stupid. Why do you want to cycle 180 Ks for fun? Well, because that's how I understand life. I understand it as, in pursuit of progression.
Very nice. And I think you just kind of tapped into a little bit of maybe your worldview. And when you look at the market specifically, is there a kind of an underlying worldview that you have as far as this is a financial war and I have to, be very protective, or this is an art and I'm the artist, or this is a puzzle that I'm trying to solve? Is there like a dominant thought that you have when you think of the market?
I'm very much about beating myself. I don't really, I'm one of the lucky ones that I've never looked at other traders and I've never envied them. Okay, and there's a number of traders that are substantially, have drawn out more profits out of the markets than what I have. But I never look at envy at them. Unfortunately, I was never born with that competitive bone. I don't look at them and go, oh, I want to be better than them. I'm going to work hard. Blah, blah, blah. No, I'm very much a believer in, last week I made these decisions and I didn't want to make that. What am I going to do this week to improve on it? So I'm very much driven by my own sort of ability to get better. And it's so much so that my wife knows me well enough to know that when I stop progressing, when I stop moving forward, that's typically when I'm about to hit sort of a pause button and I'm going to need to take a break. Because if I'm not progressing, I kind of get very hard on myself. I get very demotivated. I get very frustrated. So no, I don't look at the markets as anything other than it's a challenge, and I'm going to come in and I'm going to try and beat it tomorrow. I think as a trader, we have to be, and I've never met a trader that's not completely optimistic. We're optimistic yet pessimistic at the same time. We're kind of sort of bipolar in that sense. When it's going well, we'll tell you, yeah, no, it's going well. I'm trading well. I'm in the zone. And when it's going horrible, it'll sound like it's the end of the world, when in actual fact, it isn't really. But no, I come in tomorrow and I like the challenge of it. I like that I can be better tomorrow. I like that opportunity to try again. But yeah, I'm like everyone else. I go through emotional swings. I go through tough patches and I have to deal with it. The only difference I think between, myself maybe 8 years ago is I didn't have the coping mechanisms back then. I now do. Okay? I know how to cope with pretty much any situation I encounter. And I'm ready for those drawbacks when they come. But equally, when the wave is there, it's fun to ride it. And yeah, hopefully many traders get to find that way, because it's a lot of fun. When you're trading in a zone, when you've got the momentum on your side, you're consistently applying yourself. It does become poetic in a sense, where you touch the market and it turns to gold, and it just seems like you can't make many mistakes. So yeah, I think a bit of poetry there.
Yeah, I like how you said that traders are optimistic, the good ones are. And I think it's something that, let's say, the law of attraction crowd gets very wrong about the idea that life could be so easy that you set an intention or you think about something and it automatically happens. But it is very true that the intentions you set will affect the outcome. It's not enough to just say, I'm going to have a good day and then that's going to automatically happen. But if you come in thinking you're going to have a bad day, and if you come in thinking that this is going to be rough or something, it will affect what happens to you. And getting on the realistic but right side of that, where we're not avoiding it, because our intentions are very powerful for us. Can I ask you this? When you're sitting down at the screens trading, do you have like a dominant thought that is happening? Like, I am, I'm here, I'm focused, obviously. Am I, just what are kind of like the dominant thoughts you have in your mind, if there are any?
No, I'm just a firm believer in paying very close attention to what I believe are the objective parameters I'm looking at. So on my strategy cards, for example, like I said to you earlier, if let's say I'm executing a trade, breakout trade, okay, I'll be looking at a chart, I'll be following the price action. I'm not interested in P&L. All I'm looking at is what's the order flow doing, what's the buyers doing, what sort of size offers are they lifting. So I'm trying to observe what are the objective facts that the market's telling me, compare that to my strategy cards that say this is what you should be seeing. And if I'm seeing them, I'm just kind of ticking them off in my head, going, cool, I'm seeing that, cool, I'm seeing that. If I see something I don't like, I'm going to go, well, no, I'm seeing that, which, okay, let's keep a closer eye on it. If it starts to, come back and it starts to continue to do that, then yeah, then I exit like everyone else, and I manage to trade accordingly. But no, I'm not someone that clicks and walks away. I'm someone that when I'm in the market and I've got risk on the table, I'm watching it. Okay, sure, like I said to you earlier, I've got a DAX trade on, and that is very much a put your stop in and leave it. But no, I'm a firm believer in, for example, if DAX closes today where I want it to close, that's an objective fact I'll observe. I'll tick it off first thing tomorrow morning, and I'm happy to stay in the trade until it stops showing me what I want to see.
Do you listen to any type of music, or do you purposely like noise canceling headphones? Is there anything to do with what you hear while you're trading?
No, no. I'm someone that probably does quite well talking to another trader. So I've always found when I'm talking through what I'm seeing, that kind of reinforces it. That sometimes helps me, but no, I don't need to be distracted by any music. Just the hum of the lights in the office is enough for me.
Very good. And then it sounded like one of your dominant thoughts while you're trading is just focusing on the objective information of what is happening. And I would argue that maybe one of the biggest issues in trading is building a trade idea, and then the bias of confirmation sets in, to where it's very easy to all of a sudden see very bad information that your mind will just twist it around to think this is actually good, or your mind will just completely ignore it. And getting married to your trade idea is something that's very easy to do.
Yep.
The fix for that, or the solution to that, does it go beyond, or is it exactly what you just said, focusing on the objective information?
Yeah, I think it's as simple as that. I think it is. If I said to you, it's a bit like a recipe. If I said to you, I want you to follow these 5 steps in order from 1 to 5, I think anyone can say, sure, I can do that. It's not difficult. You just follow the steps. It's the same thing with trading. Okay, step 1, is there high volume on the break? Tick. Step 2, do you see one time framing? Tick. It's as simple as that. If you either see it or you don't. There can be 1,000 different things you can see and observe and interpret, but the reality is there's only a handful of things that will repeat themselves time and time again with every pattern. Now, sure, I don't want to say maybe it's that black and white. Sometimes there is nuance, but the reality is if you know what should happen objectively and what shouldn't happen objectively, everything in between is nuance. So when you start to what we call characterize trades like this, where you're using objective facts to understand the patterns at play, you become very good at knowing what you want to see, what you don't want to see, and everything in between. So yeah, I think the more objective you can be, the more consistent you're going to become in the decision making, and that's the key. I think a profitable trader is nothing other than someone that makes less mistakes than, or they make more good decisions than bad decisions. That's what it comes down to at the end of the day. In the beginning of your career, you make a lot of bad decisions because you're still learning, you're still trying to understand how it all works. If I said to you, the odds of the market going up and down is 50-50, because by and large, technically, you should flip a coin and you should break even in the long run. So it's very much the decisions we make that do ultimately determine whether we're profitable or not. And I think that's just the key to this game, is figure out what are the good decisions that you can make more of, and figure out what are the things you definitely don't want to do and what you don't want to repeat. And then over time, you just get good at making a lot of good decisions, and you start to make less and less bad decisions. But you still make bad decisions. You'll always make bad decisions. It's just every time you make one, you understand it. You try not to repeat it next time.
Yeah, very good. As far as social media goes, are you active online, and where would you be the most active?
I've been on Twitter since 2013. I've always been very openly expressed my thoughts about things. I wouldn't say I engage with traders. Every now and again I do. I think if someone asks a good question where they want a little bit of help or something and they want an interpretation, yeah, happy to do that. I always typically respond to that. But no, I tend to just post my ideas, what I'm thinking, where I'm thinking markets should go, some interesting charts. But no, Twitter very much. Otherwise, I stay well away from social media. I don't like social media. I just think that it's very distracting. I'd far rather spend my time doing, I don't know, family stuff or reading a book or stuff like that. So no, I typically stay away from social media.
Yeah, very good. Okay, so if somebody wanted to follow along or somehow get contact with you, Twitter's a good place.
Yeah.
Anywhere else that you would direct people?
Obviously, I've done quite a bit of educational content on YouTube over the years. So I have got a number of videos there. And again, I mean, if profiling or footprint charting is something that's of interest, you can just type my name in YouTube. I'm sure you'll get a number of resources there available for you. I obviously lead up some of the education stuff for Trudelo as well. So, particularly central banks. I focus a lot on central bank trading and learning about central banks and all that. So yeah, I'd say, YouTube, you can find some content I've done over the years since, I think some of the stuff since 2012 already. And yeah, obviously, like I said, Twitter, I'm quite active. You'll see me posting there. Yeah. And don't forget those trades where I say I'm going to take a 5-1, 6-1. Ignore that. That's just to get you to click on the trade, of course. I need your clicks and your views to promote me and make me famous.
No doubt. Well, listen, it has been great just to pick your brain. And I think there's certain people I talk to, and I don't know if they even know they do it, but there's just like this wealth of wisdom that comes out just as you're trying to explain something that isn't even related to what I asked. And it was great to just hear and to just be able to connect with you and to speak with you. So I really appreciate the time. I'm going to pause the recording and I'll say goodbye to you proper, but we'll say goodbye to everybody here so you can say your last words if you'd like.
No, I think just keep it simple, keep it consistent. Trading is a tough game, but I think like anything in life, if you're willing to put the time and the effort into it and really stay patient with it, no doubt you will succeed. Okay, there is no substitute for hard work. There never has been, and there never will be.
Great last words. Thanks again for coming on, and goodbye publicly.
Yep.